Dean Rusk disagrees with you, and he was the Secretary of State at the time, but that's fine.
The communist nations have exploited the turmoil of a time of transition in an effort to extend communist control into other areas of the world.
Thoughts on Dean Rusk and America's involvement in Vietnam? I know next to nothing about that.
Exactly.
You make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Fannie and Freddie, but also the housing market in the U.S. and the affordability crisis that people are talking about. And those two are not only related, but there's a causal relationship between the existence of Fannie and Freddie and the affordability crisis, meaning that contrary to their stated purpose, these GSEs make housing more expensive, not more affordable. So I'm going to talk for a while about the situation and what's being proposed right now with those two entities that have been in conservatorship since the 2008 global financial crisis. And then when I'm finished talking about it, I will start opening up the space to conversations and questions. But let's keep all of the points that you may want to make or questions that you may want to ask germane to this topic. So don't bring up Bitcoin or anything like that. That's not the purpose of this space today. So let's keep it on topic. And I have no idea, most likely nothing that I say is going to have any influence on what ultimately happens politically. But I think it's important to get the truth out there because there's so much misinformation in the mainstream media and such a lack of understanding of the topic. And for those of you who know me or some people who may not know me, if you happen to be in the space, but I first made a name for myself by accurately predicting the 2008 financial crisis. And the reason that I knew that crisis was coming was because I was very familiar with the mechanisms and the dynamics that were inflating the housing bubble and the way it was being financed. And I was particularly aware of the contributing factor of Fannie and Freddie, the roles that they played in helping to inflate the housing bubble. And I also knew that one of the casualties when the bubble popped would be that Fannie and Freddie would go bankrupt. And that was a forecast that I was publicly making when the stocks were, trading above $50 a share each. So the markets were not even close to worried about a bankruptcy when I was predicting it. And I knew that they would go bankrupt because I understood that the mortgages that they were guaranteeing were going to fail in numbers that far exceeded what anybody would have imagined, which was the other reason that I was encouraging people to short those mortgages by getting involved in shorting the subprime market. So it was all part of that understanding. But the way that Fannie and Freddie helped push up home prices was through the guarantee of mortgages. Now, back at that time, there was no actual guarantee behind Fannie and Freddie. So if Fannie and Freddie insured mortgages, which was their job, right, to basically buy up and insure privately issued mortgages, so long as they conform to some standard, that they kept lowering and lowering so that Fannie could insure more and more mortgages. And of course, they were lowering the qualifications as homes became more expensive, which was a direct consequence of Fannie and Freddie's guarantees. But while there was no formal guarantee, it was just assumed that if the GSEs got into trouble, if there was a problem, that because the government created Fannie and Freddie and basically had, blessed them, that if something happened, that they wouldn't just sit by, that they wouldn't allow defaults and losses on debt that was insured by Fannie and Freddie. Now, there was no explicit guarantee. In fact, there was the opposite. Back then, the government went out of its way to tell the markets that there was no guarantee. All of the paper that existed came with a warning. These obligations are not guaranteed by the U.S. government, right? Proceed accordingly. And so the government was telling the markets, we don't guarantee these bonds. But the markets were kind of like, yeah, we don't really believe you. But there was always some doubt, which was why the debt didn't trade on par with treasuries, right? If there was a full faith guarantee, then if you owned a bond that was guaranteed by Fannie and Freddie, it would be the same as owning a treasury. And so they would have the same yield. But they didn't have the same yield. The yields were higher because it wasn't known for sure. You still took a risk that maybe they wouldn't get bailed out. But the fact that they probably would get bailed out meant that mortgage credit was more easily available because of Fannie and Freddie, meaning it was easier for people to borrow more money than they could borrow in a free market and on, more favorable terms. They could have lower down payments. They could have lower quality, right? Lower credit scores, or they could stretch. They could borrow more in relation to their income, right? Credit was a lot easier because of, the implied guarantee that was created by Fannie and Freddie. But more so than just that, right? And first of all, so because of that, people could pay more for houses than they otherwise could pay. The government was fueling housing demand by providing easier credit. And now potential home buyers could use that credit to bid up home prices. Now, ironically, that doesn't benefit the home buyer, right? If you bid up home prices because you're bidding against other people who also have access to cheaper loans, you just end up paying a higher price. So the main beneficiary of governments subsidizing mortgages so that people can borrow more money to pay higher prices, it's not the people who are buying the homes that benefit, it's the people who are selling the homes. Because if you already own a home and you want to sell it, you want a bunch of buyers who can get cheap government money because they can now pay more for the house that you want to sell. So contrary to the way it is presented, government guaranteed mortgages don't make houses more affordable, they make them more expensive, right? Now, there are people who benefit from that, right? But they're not the people who want to buy homes. They just end up having to take on enormous debt. And the only consolation is, well, they can borrow, they can finance that debt with lower interest rates. But that wasn't the only problem prior to the 2008 financial crisis, because Fannie and Freddie were not only guaranteeing those conforming loans, they were guaranteeing what we used to call Alt-A. I don't know if they still have that term, but Alt-A loans were really like just a notch above subprime, but for all practical purposes, they were subprime. And Fannie and Freddie was guaranteeing those Alt-A's, helping more people overpay for homes they couldn't afford. And Fannie and Freddie was a huge buyer. I think they were the biggest buyers of subprime mortgages. So they didn't guarantee those mortgages, but they helped create a market for them by buying them. So Fannie and Freddie was funneling all sorts of credit into the housing market, providing air into the bubble and fueling the speculative frenzy, right? Because during the bubble, when people were getting rich on home price appreciation, more people wanted to buy homes, not because they wanted a home to live in, because they wanted the home to make them rich, right? People were buying homes to make money, right? Not simply as a place to live, but to use their house as a, perpetual ATM machine. And all of this, again, was being fueled not just by Fannie and Freddie, but by the Fed, which kept interest rates at 1%, not even zero back then, 1%, right? But 1% was enough, coupled with government guarantees, to really fuel that bubble. And so I knew that once, mortgage rates moved up, once the teaser rates reset, once home prices fell, which was inevitable, I knew that there was going to be a wave of foreclosures and defaults that would, mean massive losses for the lenders, and the losses would overwhelm the capital that Fannie and Freddie had, and so I knew that a bankruptcy was inevitable. Now, I didn't know for sure if the government was going to bail them out. I mean, I like the markets, I thought that probably would happen. Now, of course, the right thing for the government to have done at the time was to say, hey, we told you Fannie and Freddie debt wasn't guaranteed, and we meant it, right? And they should have allowed not only Fannie and Freddie to go bankrupt, they should have allowed people who owned their debt to lose money. And the companies should have been gone for good. They should have went bankrupt, not into a government conservatorship. They should have went through a traditional bankruptcy. Now, had that happened, the 2008 financial crisis would have been much worse, no doubt. The losses would have been greater. The decline in home prices would have been greater, which is why it did not happen, right? There were a lot of political reasons why everybody got bailed out. They were mistakes, right? The reason that housing is so unaffordable today is because of those mistakes. Had the government done the right thing, home ownership would be a lot more attainable for a lot more people because houses would be a lot cheaper, right? I mean, this is basic economics, right? This is why college tuition is so expensive today. Before the government got involved in loaning money to students and guaranteeing student loans in the 1960s, college was not expensive. People did not borrow money to go to college, right? If you grew up in a wealthier family, upper middle class, upper class, not, I'm not talking super rich, just affluent, right? By today's standards, maybe your parents earned $200,000-300,000 a year, for something like that, right? Your parents could afford to send you to the best college. They didn't have to, it was no big deal. If you came from a middle class family, a lower middle class family, let's say families that earn 40, 50, 60, 70,000, I don't know, 80,000 a year, right? Where it may have been a stretch for your parents, you got a job. That's what my dad did. My father went to college, and his parents were, he said he wasn't sure if he was upper, lower class or lower middle class, right? But, that's where he was. But he worked his way through college. His parents didn't pay for it. He had a job over the summer. He waited tables every summer. But the money he made over the 2 to 3 months of the summer, that was enough money to pay all of his tuition, room, and board, 100% of it. So when he graduated, he didn't have any debt, and it didn't cost his parents any money, right? And it was very common. People used to say, I'm working my way through college. That was a common thing. Nobody works their way through college now because it's impossible, because college is so expensive. But why is college so expensive? Because the government tried to help people afford it by guaranteeing loans. And one of the reasons they did that in the 1960s was that's when the 18-year-olds got to vote. And so one of the ways to get 18-year-olds to vote for you was to tell them that they wouldn't have to work while they were in college. Why waste your summers working as a waiter? Just borrow money from the government and enjoy your summer in Europe. Go to the beach, right? Have fun, party while you're young. Don't worry about it. You'll just pay back these loans later on when you get this great job. So that's what started the whole thing. But once the government started guaranteeing college loans, colleges were free to jack up their prices. They were no longer bound by the free market. They just kept raising their prices, and so the government kept increasing the amount of money that they would loan and they would guarantee. And the beneficiaries were the colleges and the universities who got to overcharge for a college degree. And now the poor students graduate with massive amounts of debt and degrees that have very little value because now everybody gets them. You know, back when you actually had to pay for college yourself without government help, a lot of people just didn't even go because there was no reason to go. But if you went, it didn't cost that much money. So the government totally screwed up college, made it really expensive. They increased the price of a college degree while decreasing the market value of the degree. That's how government works. And they've done the same thing with housing, right? All this government subsidies, making mortgages tax deductible, guaranteeing mortgages. That is why houses are so expensive today. That is why we have an affordability crisis. Now, the solution to the affordability crisis is real simple, right? Lower home prices, right? If houses are too expensive and people can't afford them, what is the obvious free market solution to that problem? House prices come down. House prices come down, more people can afford to buy them. That is what would happen if the government stayed it out. But everything the government is doing is trying to prevent that from happening. All of the government's so-called fixes, including what's being talked about for Fannie and Freddie, all of this is designed to prevent home prices from falling. What the government's solution to housing unaffordability is making it easier for people to borrow more money so that they can overpay for expensive houses. That's it. Because if home prices come down, that is going to create another problem for current homeowners who are going to lose home equity and lenders who have loaned out money to people to overpay for homes. Because we should know now from past experience that if somebody borrows, let's say $400,000 to buy a house, and the house is only worth $300,000, there's a good chance they ain't paying the money back and they're going to default. And when they do, the lenders lose money. And if those loans are guaranteed by Fannie and Freddie or the FHA, the U.S. taxpayers lose money. So the solution to the housing affordability problem exposes the other problems that the government created. Because the reason that there's so much mortgage debt out there is because of government guarantees. The reason that there's going to be such massive losses when real estate prices fall and these loans go bad is because the government used those mortgage guarantees to inflate home prices in the first place. So government is making more mistakes to try to cover up the consequences of their prior mistakes. But the more they keep making these mistakes, the worse it gets. Now, let me circle this back to Fannie and Freddie. So Fannie and Freddie, the government steps up and guarantees everything. Everybody was made whole. Nobody lost any money. Yes, people that owned Fannie and Freddie stock got wiped out because the stock went from over $50 to pennies a share. It was delisted and it went, over the counter, and so the common stockholders got wiped out. Right? Preferred stockholders basically got wiped out. But if you owned bonds that were Fannie and Freddie guaranteed, you lost nothing. You should have lost something, but you lost nothing. But the government then basically created this permanent backstop where the government said, look, we got your back. You were right, to assume that we were going to bail you out. We're standing behind Fannie and Freddie. We're behind their debt. Don't worry about it. So the implicit guarantee that existed prior to conservatorship, for all practical purposes, is now explicit. Everybody knows. It's not an unknown. Everybody knows that if they get a mortgage that's backed by Fannie and Freddie, the U.S. government stands behind it, which is why the GSEs now can borrow, cheaper than they could in the past, because it's not uncertain. The only thing that is uncertain is, will they ever come out of conservatorship, and will that explicit guarantee go away? But as long as the GSEs are there, nobody is worried, because they know that as long as they're operating in a government conservatorship where the government has complete control over these entities, all the losses are basically guaranteed by the U.S. government. Now, a lot of investors, during the period of time where the GSEs were trading for, 20, 30, 40, 50 cents a share, even above $1, $1.50, bought up these shares, hoping that the companies would be resurrected, and that the stock would be much more valuable. Now, what they don't understand, or maybe they do understand it, but they don't care, is it is now impossible to put the GSEs back where they were. Because in order for the GSEs to exit conservatorship, which, the whole plan that people talked about for years, they called it cap and release, which was recapitalize, raise money through an IPO, sell stock to the public, recapitalize these GSEs with a bunch of new money, and then release them back into public, private companies, right? Now, even though they were public before, they were not quite, because of this implicit guarantee. But again, it wasn't explicit. The markets just assumed something. But now, in order for the government to actually release these entities and go into the market and sell securities and get investors to put money into new Fannie and Freddie stock, right? There are all sorts of underwriting rules. The government has to make a complete disclosure about the nature of this company and whether in fact there are any government guarantees. So to do an IPO, the government has to say either Fannie and Freddie is going to be a private company and there is no government guarantee, which is what they said the first time, right? They have to remind the markets there is no government guarantee. The government does not stand behind this debt, and they're private companies. So you have to look to their own capital structures, right? So before you buy any debt that's insured by Fannie and Freddie, make sure that, they have the capital. Make sure that, because you could lose money if they make too many risky loans, if the housing market tanks, right? Now, that's a non-starter. They won't do that, because if they do that, they really destroy the value of the GSEs, because their real value is selling government guaranteed debt, right? They have a monopoly or a duopoly on, putting, co-signing the U.S. government on all these mortgages. That's their value. And of course, if they do that, then mortgage rates will be higher, which they should be, right? Mortgage rates should be higher because the government should not be guaranteeing mortgages, right? It's not good economics and it's unconstitutional, right? The government should not be doing it. But it's a non-starter politically. We know that the Trump administration or Congress are not going to do something that makes mortgages go up, because they want to keep the housing bubble going. They want home prices to stay high, right? That's why they're talking out of two sides of their mouths when they say they want homes to be affordable. No, they don't. That's the last thing they want, because that means lower home prices. That means Fannie and Freddie are going to lose a fortune again. So they don't want that, right? So they can't do an IPO because they can't raise capital, because they can't tell the truth that there's no government guarantee. Now, alternatively, they can say there is a government guarantee. Now it's explicit, right? The U.S. government guarantees this. But they can't do that. They need an act of Congress, because now all of this Fannie and Freddie debt becomes official U.S. government debt. You can't just do that. The president can't just do that. Congress would have to approve that. And as bad as Congress is, I don't think there's any appetite in the U.S. Congress to basically make all of Fannie and Freddie debt officially part of the national debt. And of course, that's an even worse moral hazard than the one that we had in the past. See, the problem with the moral hazard, where you have private profits and socialized losses, is you have excessive risk taking, because the long-term consequences are not borne by the risk taker. Especially, in today's world of, you have to, corporate earnings and, the pressure to make a good quarter and to have earnings and all that. If you have no consequence whatsoever regarding the long-term losses that may result from the risky loans that you're making, you're going to make more risky loans. So we had a big moral hazard in Fannie and Freddie when there was an implied government guarantee. But the moral hazard would be that much greater if the guarantee was explicit, because that would give the GSEs carte blanche to make even riskier loans than they did before. So it's the worst of both worlds, which is why leaving the GSAs where they are is the lesser of the two evils. If all your choices are to somehow try to privatize them or leave them where they are, leaving them where they are, as bad as that is better than privatizing them with some kind of an explicit government guarantee. Now, I think what's been happening recently, because a lot of the people who bought the GSEs donated heavily to the Trump campaign because they knew that Biden would never approve a plan to cap and release these entities or privatize them. And so they were counting on Trump doing that. And so that was a reason that a lot of people donated to his campaign that also owned the shares, because they were hoping that Trump would go for it. But I think what they realize now is exactly what I said, that the whole plan is impossible if your goal is not to make mortgage rates go up and to keep housing prices inflated. Then you can't do either of those two things, right? You're not going to be able to have the implicit, you're not going to be able to remove the guarantee, yet you're not going to get Congress to bite on making it explicit. So what they've come up with, and this is what started this Spaces, is, Bill Ackman comes up with this plan that says, okay, instead of doing an IPO now, let's do the IPO later. Now, the reason we can't do the IPO now is because we can never do it later. So they're trying to push off the consequences of having to make a choice that they can't make by trying to say, well, they're not ready for an IPO yet. They'll be ready in the future. Well, I mean, clearly they're never going to be ready. That's why we can't do it. But his plan, right, is really just a bailout for investors that own the stock, and not something that's going to help taxpayers or the economy or housing. So first of all, the idea that he has an idea, well, let's leave them in conservatorship and let's uplist them to the New York Stock Exchange. Well, first of all, I don't even know if that's even possible, because I don't see how that would satisfy the listing requirements of the New York Stock Exchange when they're in conservatorship. I mean, that doesn't even make sense that a company in conservatorship can be listed. You would need to be out of conservatorship as a condition of listing, because in conservatorship, the government has complete control of the company. The shareholders have no say in anything. There's no way that they would be able to even be qualified. The other thing that he wants them to do is for the government to forgive all of the senior preferred debt that they currently have, so that the company would now be free to basically pay dividends to the common stockholders and to the junior preferred. But right now, whatever money Fannie and Freddie is earning, even though it's not technically being given to the U.S. government, is basically being given to the U.S. government because they buy treasuries with it. And so the government gets the money. But of course, the money is there to cover the losses that are sure to hit, right? We are in a housing bubble. Housing prices are much too high. They are going to come down eventually. And eventually, a lot of this debt that Fannie and Freddie has been guaranteeing is going to blow up, and there are going to be a lot of losses. And Fannie and Freddie is going to need to reimburse, the people who own the debt. So that's all coming, right? It's all inevitable that this is going to happen. So in the meantime, if that were to happen and dividends were to be paid to private investors, that would just increase the losses to taxpayers because, that money would have been paid out. They can't claw it back. They're not going to be able to say, hey, we just blew up, so all the stockholders that got paid dividends, you got to give your money back. No, right? So that would be bigger losses for the government. Ackman wants the capital requirements to be cut in half, which the only practical result of that would be Fannie and Freddie making even riskier loans. Because right now, the capital requirements don't really mean anything in practice because they guarantee every single loan that conforms and qualifies. So there's no real restraint. As long as the loans conform to their standards, they get guaranteed. But I think what they're trying to do is get the lending standards lower, which is why they're getting rid of the FICO scores or talking about these 50-year mortgages, or they're doing stuff. They want to make it so more people can overpay for homes they can't afford using government credit to do it. But all this just makes the problem bigger. But the idea, what Ackman is saying is that, look, this is going to be the first step on a road that will eventually lead to privatization, knowing that the road never leads to privatization because then you have the same predicament that you have now. There's no way. The government cannot do any kind of IPO without, either making the guarantee explicit, which would require an act of Congress and which would be a complete disaster, or eliminate it completely, which is the right thing to do, but which they will never do because it will, tank the housing market and make mortgage rates go up. So they don't do anything. Now, Ackman is trying to act like this is a big win for the U.S. taxpayer, because if the government does this, if it forgives the senior preferred, if we get an uplisting, which I don't even know how that's possible unless we get the New York Stock Exchange to completely change its standards on how to qualify for a listing. But assuming that can be done, that the share price will go way up and the government can exercise its warrants, its little penny warrants, to buy basically 80% of Fannie and Freddie. And since the stock price will be so much higher, the government will have this windfall now for taxpayers because it's going to own this huge stake in Fannie and Freddie. But that's all BS. That's all just for show. And maybe they think that that's all Donald Trump talks about or cares about is form over substance, because there is no substantive gain to the taxpayer by owning a position in Fannie and Freddie, which it can never sell. Because once the U.S. government exercises its warrants and owns all this stock in Fannie and Freddie, it can't sell the stock. Because if it wants to make an offering of that stock, it's going to face the same predicament that Fannie and Freddie would have faced had they done it itself. Once the government becomes an issuer or a seller, if you're an 80% owner of a stock and you want to now sell to the public, you're going to have to file. And now they're going to have to make the disclosure. So now they're going to be at the point where, once again, they have to say, does the U.S. government back this debt? If they say no, the whole thing's going to collapse. And of course, the whole purpose of having Fannie and Freddie own 80% of the stock and never sell it is so the people like Ackman, who own the stock now, can sell. They want to limit the float. They want to limit the liquidity so that the only sellers are the people who already own it. The taxpayers don't benefit. They don't get to sell. They're the patsies. They're the bag holders. They end up holding the shares when they collapse again in the next housing crisis, and now they have to pay out all the losses. I mean, the winners are the people who bought the shares in the GSEs before the election, betting that Trump would win, or shortly thereafter the election, betting that something would happen. And they cash out, right? They walk away. They bought stock for 30, 50 cents a dollar. Now, Ackman is talking as if the stock's going to go to $40 if they uplist it somehow and they get pension funds or other investors who can't buy, over the counter on the pink sheets, whatever, who can't buy the stocks, to somehow get them to buy. But also, I don't think the U.S. government, even though they can never sell the stock, they'll probably never even collect a dividend. My bet is that the plan is for the government to forgo its yield so that all of the yield can be paid to the private shareholders, right? Where the government gets none of the profits. Because I've never heard Ackman or anybody talk about the gain to taxpayers in the form of the dividends that they're going to get on their Fannie and Freddie stock. All they talk about is the paper profits they're going to have on stock they can never sell, right? Which again, it's all just an illusion. But yeah, can Donald Trump say, oh, look, I made the taxpayers hundreds of billions of dollars because this is the value of our stake? Yes, I suppose, you could make that bullshit case and some people will believe it, right? But of course, it's meaningless. If you can't sell it and it doesn't pay you any dividends, it means nothing, right? It is a smokescreen to allow fake gains, a fake win. But the real purpose behind the whole thing is just to push up the price of the stock. And it's possible that they all know that they're never going to get the uplisting because it's not going to, they keep saying, oh, the New York Stock Exchange everybody would love to list these companies. Not in conservatorship, they wouldn't. Yes, would they list them if they really were recapitalized and released? Sure, but they're not the way they are now. And forgiving the senior preferred or lowering the credit, none of that changes the fact that they're still completely controlled by a government entity where the shareholders have no rights whatsoever. How do you list something like that on the New York Stock Exchange? It would make a mockery of the whole exchange. But I think a lot of it is just designed to get people to think, oh, it's going to get listed. There's going to be all this demand. So let me buy it now. Let me get in advance. They're all talking about $40 stock when the shares are $8, $9, $10. So they're trying to get more people in. And who wants more buyers to come into a stock? The sellers. If you own stock and you want to sell it, how do you do that? You got to get more people to buy it. Right? And that's all this hype, all this talk. It's all about trying to get more people to buy in to Freddie and Fannie stock so the people who own it can sell. That's it. And they want to pretend that somehow this is good for the country, this is good for housing. None of it is good for the country. None of it is good for housing. The best or the least bad option of between doing nothing and doing some type of privatization or cap and release or whatever this plan is by Ackman is better to do nothing and leave it the way it is, right? Leave it in conservatorship, no private profits whatsoever. It's government profits and government losses. The worst thing that you could do is to socialize the losses and privatize the profits. That is not capitalism. That's cronyism. That's, it's the worst thing you could do. Now, the best thing you could do is the one thing that we won't do, and that is get the government out of the mortgage market completely. That is the only solution to the housing affordability problem, which means it won't be solved, right? It'll just get worse because, the mortgage lenders or the banks or home, there's so many people that will lose. The cure creates its own problem. But it's better to bite the bullet than to continue to make the problem worse. Better to solve the housing affordability problem and deal with the credit losses, clean up that mess, and then clean house and move forward, right? It's never a good idea to delay dealing with the consequences of a problem by making the very problem worse, so that the consequences of dealing with it later are even worse than the consequences of dealing with them now. Now, for politicians, it's always better to deal with worse consequences later because it may not be their problem later because they may not be in office. That is the inherent flaw in this system. There is a built-in incentive to kick the can down the road even if doing it leads to a much worse problem. And then, of course, when we have that much worse problem, what do? Blame it on capitalism. They say nobody could have possibly predicted it. And then what is the solution? Oh my, we need even more government. We need bigger government. We need more regulations. And then they just make the problem worse. Anyway, I've been talking for a while, and we've got more people in the space now. So I guess it's good that I haven't lost people. I've got a lot more people who have been listening to the discussion. But so now I'm going to open it up to basically two things, right? If you disagree with me, right? If you think like, hey, Ackman's plan is great, right? We need to do this, right? State your case, or if you have some other plan, or if you just have a question for me about what I've said, right? And you want me to explain it better, or whatever. So those are the two things, right? You have a question about what I said and you'd like me to explore it more, you didn't understand something, or you disagree with something that I've said and you want to challenge me on that. So now I got a lot of people in here. So if you want to make a statement that opposes what I've said, or you want to ask me a question, just raise your hand. It doesn't matter which one. You don't have to, and I'll just start picking people. But you got to put your hand up so I know who wants to speak. I got people that are just. Okay, well, here's one guy that's just requested. He's not raising his hand. And now you got to unmute yourself. But S&B.
Idiot as far as Fannie and Freddie stuff. Quick question. There was a Japanese stock you mentioned. I think it's Infex. Is that in any of your mutual funds?
Infex. No, okay. That's a stock I own myself. It's an oil company. I've owned it for years. I mean, a long, long time in Japan. But I don't believe we own it. We've owned it at one time, but I don't want to get off topic. Maybe you missed the beginning of this, that this purpose of this Spaces is not to discuss stock picks or cryptocurrencies. It's completely just on Fannie and Freddie, the plans to try to privatize them, to uplist them, to forgive, Ackman's plan, or just, the whole housing problem that they create. I want to keep it focused because I know, and what the inspiration for this was that Ackman himself, after he came out with his, self-serving plan, bailout disguised as a good thing for the country, he explained everything on an X space, right? He went out there and he said all this nonsense on X, and so I wanted to do the same thing myself. I got no skin in the game, right? I'm just calling it as I see it, right? I'm not biased in that I'm trying to unload a bunch of my Fannie and Freddie stock. I'm representing the taxpayer, the American government. It's like everything I do, I never publicly advocate for things that I believe are going to benefit me personally. If I don't believe in it. Like, for example, I want the Fed to hike rates. I keep saying that interest rates are too low and that the Fed should raise interest rates. That's what I advocate. I advocate that the Fed should shrink its balance sheet more. That not only should they not be ending quantitative tightening, they should be upping it. They need to sell more treasuries, more bonds into the market. Now, if the government, if the Fed actually did what I'm advocating, I would lose money. I mean, my gold stocks would get killed. Gold would go down, right? The stock market would go down too. I'm long all kinds of stocks. The dollar would probably go up. I mean, everything, my entire portfolio would get hammered if the government did what I am advising them to do. Now, I am advising them to do that because I think that is the right thing. Not because it's what helps me personally, but because it's what helps the country. Now, the reason that I have all the investments is because I know that despite everything I'm saying and everything I'm urging the government to do, that they're never going to do it. They are going to ignore everything that I say, if they even hear what I have to say, and they are going to do the wrong thing. So That's why I'm invested. In fact, if I was invested in Freddie and Fannie, it would be for that reason. I would be saying the same thing now, let them go bankrupt, shut them down, wind them down, knowing they're not going to do that. And so to the extent that Fannie and Freddie go up and people end up getting to cash out and make a profit, it's because they profited off of bad policy. They profited off of the government doing something that is harmful to the U.S. economy, harmful to the taxpayer, but it happened anyway. Just like, the next round of rate cuts is going to be harmful. I mean, the rate cuts that they're doing now are a mistake, right? But they may benefit me because they'll benefit the investments that I've made, which in part are predicated on my confidence that the government is going to make those mistakes. Anyway, who's next with a question or a comment that's related to this topic? I just added Lumi. Hello? Lumi?
Hi, Peter.
Yes.
Thanks for taking my call, buddy. Long-time listener, first-time caller. Can you maybe explain the differences between conservatorship and receivership? Are they the same thing? Is it just when the government holds all the shares? Thanks, buddy.
Yeah, I mean, so receivership is more of a bankruptcy, like, and so they didn't really, they didn't say, okay, we're putting it in a receivership as if we're going to wind it down, because when you're in receivership, you're basically going away, right? I mean, it's a process that results in the entities being shut down or I guess completely sold off. But that was never intended. I mean, they weren't really winding down. The whole idea was to keep the GSEs operating, but operating through the government. And so that's what the conservatorship did. It's like they took them really out of private ownership and put them under complete control of government. And the way the whole thing was structured with the senior preferred, they really were structured so that they would never come out of bankruptcy, of conservatorship, because they also had to assure the markets that the government had everything covered. That was part of the bailouts, was that don't worry, this is all treasury debt. If you own these Fannie and Freddie insured mortgages, you don't have to write them down, you don't have to worry about losses, the government's got your back. So this whole thing was created. And now when they try to go back and say, look, this was unconstitutional, the government ripped off the shareholders. Look, the shareholders would have lost everything. There never should have been any bailout. All the shareholders should have been wiped out, all of them. So the fact that, they weren't wiped out, it doesn't mean that they got ripped off, because they should have lost everything. But the worst part about the argument that somehow, the shareholders are owed this by the government, like they got a raw deal and the government, made all this money and they should give it back. The people who own stock in Fannie and Freddie now are not the people who owned it in 2008. Those guys are long gone. They've already lost all their money. The people who are claiming that these poor shareholders need to be made whole are the people that swooped in like vultures and bought up the stock at 30 cents, 40 cents, 50 cents. They did not lose all that money, but they stand to reap a windfall, right? If they can get out of the stock, even at the current price, right? $9 or $10. Selling out now is a huge gain for Ackman and a lot of others who bought the stock at a fraction of this price. Now, maybe they can't sell enough. Maybe there's not enough liquidity. They're trying to get more buyers in, right, so that they can sell. But to say that, these poor shareholders got reamed and now they need to be compensated, that's BS. The shareholders who got reamed are gone. They're permanently reamed. The ones that are going to be rewarded or enriched, right? That's a complete windfall. So I don't buy that argument either, that the government screwed over the shareholders and now they're owed some money. That's all self-serving nonsense to justify a windfall for the speculators who came in and bought the stocks after they imploded. Who's next?
Can I give my opinion? I'd like to talk. I'm Eleanor Snow Leopard, Peter Schiff. Well, that's not my real name, but I'm an Air Force veteran.
All right.
And
thank you for your service.
Well, thank you for the gold. The gold is what's interesting to me, because See,
Well,
we
I don't
didn't
want to
really.
talk about gold. We're talking about Fannie and Freddie and the housing market.
Well, I do because I didn't know that until 1974 you weren't allowed to have gold. Until
Yeah.
1974,
Yeah,
you were.
Eleanor, I appreciate this. Call me back on my next spaces. I
Okay,
promise.
well, let me. Look, I have one more point to make. This whole thing is about Epstein files because the people at the
Okay,
top
I don't want to talk about the Epstein files.
that he's protecting,
Eleanor,
he's protecting all these billionaires, and that's what this is about. If you don't,
Okay, yeah, I can't talk. I'm not talking about the Epstein files. I don't want to talk about this very simple topic: Fannie, Freddie, housing. That's it. You don't have a point on that, then then wait for my next spaces. All right. I just added somebody else who's been flashing. Lumi, you're up?
Yeah, sorry, man. I had a phone call in the middle of everything, and it was a little bit more important. Sorry. All right. So my thoughts on this seem a little negative, but at the same time, what has America done best from 1940s until the 1970s? Created the most wealth of American people through the 30-year mortgage, right? And so to deny people the ability to go through that process again, which is what you've been stating, basically, is kind of outlandish and is, I'd say, un-American. Because really and truly, when you really put it down to it, that created the most amount of wealth for Americans, one way or another, however way you cut it. So I agree with you on many other topics and many other things, but on this one, I disagree with you. Congress even wrote in many different documents how this is going to exit. You need to basically become more educated on what has already been proposed by Congress previously. There's a lot of things which you said which are erroneous as well, so I just want to point them out. I mean, you should bring up some other speakers as well. There are some people who probably will take you to task on what you said.
Well, I'm
hoping.
I'm hoping people will take me to task. But
right, so listen.
Let me comment on something that you said though, because I don't believe that it's home ownership that has created wealth in America, and I don't believe that.
You don't believe, or do you have facts?
No. Well, I also have facts, okay, but and I don't believe that absent a 30-year mortgage. Let me finish talking. I don't believe that absent a 30-year mortgage, people would not be buying homes. That the only reason that people can buy homes is because there's a 30-year mortgage, because people buy homes all over the world and they don't have 30-year fixed rate mortgages. And so it's not that we need a government guaranteed 30-year fixed rate mortgage to have a housing market. But I will agree that the housing bubble, which government guaranteed mortgages has helped inflate, on paper has created wealth for some Americans because they have home equity that they might otherwise not have had their homes not gone up in price, right? So yes, the government has helped inflate a housing bubble, which has worked to the benefit of people who own homes, right? Who can now sell them at a higher price. But I don't think that's contributing to actual wealth of our society. I think that's actually undermines society. I think we've misdirected credit towards housing. I think we've encouraged people to buy homes who otherwise might have rented homes and who for renting would have been a better alternative.
My question is this.
I gotta finish.
I mean,
I gotta finish my point. I gotta finish my point. And we've misdirected a lot of resources because houses are depreciating assets. They get used up, right? You don't get rich because you own a house. You use up a house. A house is an expense. A house depreciates over time, like a boat or like a car. It's just usually a little bit more slowly. But a lot of people would be much better off as renters than stretching to own homes that they really can't afford. So I think the government has done harm to the economy. And if you look at the U.S., we've gone from the world's biggest creditor nation to the world's biggest debtor nation. We've gone from huge trade surpluses to trade deficits. I think a lot of the structural problems that we have in this economy are a consequence of misdirecting credit to the housing market that should have gone someplace else. We should have been building more factories instead of McMansions. But because the government interfered, that's what we did. And so I think the government has done a lot of harm. The government has not helped us. by distorting the
Well,
free market.
by your definition, we've done a lot of harm by buying gold because it's a useless asset which does nothing to us as a people. So this is the whole point you made is totally wrong.
Gold
by
is
that definition.
Gold is not a useless asset. It's the most useless, it's the most useful metal on the periodic chart. But
when
I mean,
hoarded,
gold,
it does nothing though, right? If you hoard it, it does no utility.
right? Yeah, I
for
know.
us. So,
I would
so
rather.
exactly. So you
I
proved
would
my
rather.
point. So what I'm trying to say,
I
let me
would
finish my
rather.
points.
I would rather loan my gold to somebody who can then use it to build, to make an investment and build a factory. Yes, I would rather be
Now
on
you
a
sound like
on a monetary
now you
system.
sound like a central banker. Now
No,
you're a
I
central
sound like a
banker.
free
So,
market capitalist. I don't want central banks
listen,
to have anything to do with it.
The Basel III Banking Act means that gold is collateralized at 100%. Please educate yourself. Listen now, the 50-year treasury is going to be a thing because the 50-year mortgage is going to be a thing.
Hopefully
which means
not.
that
I don't think there's any demand.
Oh, it's going to happen, my friend. It's going to happen. Let me finish because this is what you're missing, is that state planning is bigger than you. State planning means that how they're going to move this along. I agree with you on the facts of what's actually happening, but what they're going to do is a different thing. So yes, it may be wrong, but it means that for 20 years, they'll be able to inflate this debt away. We haven't paid off our Civil War debt, my friend.
Well,
we're not going to pay off anything ever.
If they if they have government guaranteed 50-year mortgages, which of course will need a government guarantee because nobody else would be dumb enough to buy one without the government guarantee, which means Fannie and Freddie have to stay in conservatorship for those 50-year mortgages to exist. But there's no point. And if a 50-year mortgage it's like renting because you don't have any equity because you're not paying any principal for most of it.
What happens if you're a family?
Huh?
What happens if you're a family halfway through your 30th year and you're really struggling and you just need $600 a month more to survive so you don't lose your house to the bank, right? And get taken out of the game. So that's where
how do you refinance? You can't refinance from your 30-year mortgage to a 50-year. They're talking about taking out a new mortgage.
This is about the portable mortgages. They brought up this idea about portable mortgages and also the 50-year. And the idea is that there's going to be this new idea coming forward where you'll be able to move your debt from asset to asset as long as it meets certain criteria.
Yeah, and you know what that means? That means huge losses for the lenders and the taxpayer because the low mortgages right now, and part of the problem, and I forecast this before it happens with her, because I knew it was going to happen. You have a lot of mortgages out there where maybe there's 25 years left on them, where they're fixed rate in the 4%, and those mortgages are all liabilities for the lenders because they're earning less than the cost of funds, and what the lenders need is those loans to be repaid. They need those low mortgage rates to be repaid so they can loan money back out at a higher rate of interest. But if you make it so that those mortgages never get repaid, so that they're portable and assumable, you have solidified massive losses in the banking system that now need a massive government bailout. So all this stuff just makes the problems that government created much worse. I believe in letting the free market solve government problems, right? But the problem for that is that it exposes it. The free market exposes the problems quicker, and forces you to deal with the problems sooner. And all that is much better for the long-term health of the economy. But it doesn't happen because of the politics. And yeah, they may try to push us in the direction of these 50-year mortgages, but if they do, again, it's not going to be with any way to privatize Fannie and Freddie. They're going to have a government guarantee, and to maintain that guarantee, they're going to sit right there in conservatorship forever. Who's next?
Didn't Bill Ackman propose though with the government guarantee to pay a fee? And also, didn't he state quite clearly that almost all large institutions have government guarantees? Explicit or not, right? So who are we kidding at this point?
Well, just because the two wrongs don't make a right. Yes, I agree. The banks, now they all pay into the FDIC.
I'm just saying which reality you live in. I'm just trying to work out which reality.
No, but we don't have to make it worse just to make Bill Ackman richer. I mean, he's rich enough. He doesn't need a windfall just to say, well, the government guarantees banks, so they should guarantee Fannie and Freddie. The government shouldn't.
So you're
shouldn't guarantee banks. That's a
opposed
mistake
to him
too.
being made wealthier. You're just in opposition to him basically being in a position to have 210 million common shares and to have 10% of each company, and you just agree with that.
I have
That's
no.
what you're
I have
basically.
no.
This is what the space is essentially.
I have no problem with Bill Ackman getting richer honestly. Going out and creating value and getting richer. I got no problem with that. I do have a problem in him becoming richer at the expense of the taxpayer, the economy, by being able to cash out of his Fannie and Freddie stock, which is what he's going to do. He is going to sell. He is not going to sit there and hold that stock. He is going to be long gone by the time this thing blows up, if in fact this plan can ever be.
I'm going to ask you this. Do you know that he did an interview in 2015 saying exactly what he said in that space? Did you know that?
Say what?
And that interview can be found. That interview can be found on YouTube. A lot of people have seen it. And that interview had another lady in there who read a book about this exact situation. And that was in 2015. So that was 10 years ago, a decade he's had his position and stated his position.
Yeah, his position's been wrong for a decade then. Because there was a lot of hope. There was a lot of hope that Donald Trump.
I'm just going to point out right now, I'm not a fan of Bill Ackman overall. He's a good guy on something. He's right, but I disagree on other things. What I'm going to say is this, though, is that at the end of the day, there is merit in being early to something, right? And I will give him this, is that if he is correct, and I believe he might be, it doesn't take Congress, it doesn't take anyone but Scott Bassett, Trump, and frickin' Pulte to organize and get this out of conservatorship. And
I don't think they could do it, because I don't think you could take them public without answering the question, does the government guarantee the debt or not? I don't think they can answer that question.
Well, no, it does. They can.
No, they can't.
Listen, which world do you live in?
No, I live in reality. They can't do it, and it would be a horrible mistake to do it.
All debt is guaranteed these days. No. Like, if you didn't understand that, I don't know where you live. And also, your capital company, where you got accused that your capital ratio wasn't correct. I mean, this is the same thing with Fannie and Freddie. At 0.5% in 2008 capital ratio, they could have survived if they didn't get into the ninja loans and everything else. At 4.5% capital ratio, that's so much more than what it was.
Ackman wants to cut that in half too. That's part of his plan.
Yeah, the 2.5 is actually reasonable when you think about it, especially with AI.
Well, look, if it's reasonable, then let them do it without a government guarantee. But that's the problem. They can't do it without a government guarantee. And to say that, well, the government's making a mistake, they're guaranteeing banks. Well, they're paying FDIC insurance, right? There's no Fannie and Freddie's not paying for government backing. But the other thing is, if you're going to allow Fannie and Freddie to purchase government backing, then why limit it to Fannie and Freddie? Why not let other banks that want to insure mortgages? Why not let everybody? Why create a duopoly and say, here's these two special companies that get to buy government insurance for their loans, but we're going to deny all the competitors out there the ability to do the same thing?
Do you know about Ginnie Mae? There's loads of other companies.
No, Ginnie Mae is government. That's not private.
Exactly.
I'm talking about what about J.P. Morgan? What about Morgan Stanley? What about all these big banks? Why not let them compete with Freddie and Fannie? Why not let them buy government backing for their mortgages?
So you're saying, so this is just what I want to get this for the record. You're saying to dissolve Fannie and Freddie and to have what was going to happen with Ginnie Mae. I don't know then what you would say in your
I want to get rid of I want to get the government out of housing completely.
And then, but who's going to step in to actually provide a mortgage then? Because can you propose one company, right now, who actually is viable, who can do trillions of dollars on book?
Okay, so
right?
but what you're saying, is that mortgages can't exist absent government guarantees. That in a capitalist, you're saying that in capitalism nobody can borrow. No, what would happen?
At this scale, yes.
No, you're wrong. What would happen is home prices would fall. Lenders, instead of relying on a government guarantee, would rely on.
How much would home prices fall?
I don't know. They'd fall a lot. But look.
Isn't everyone's assets tied up in their mortgages and people? You're saying that everyone's going to get wiped out.
There are jumbo mortgages, right? People that borrow a lot of money to buy houses that don't fall within the standards of
Fannie and Freddie doesn't have any exposure to jumbo mortgages,
but
just so you know.
but according to you, the jumbo market
Or
should
commercial.
no. According to you,
Or commercial.
right? Okay, same thing, right? According to you, there should be no jumbo loan market. There should be no commercial loan market. Nobody should be willing to lend
Families
money
need a
unless
house,
there's a
man.
government guarantee.
Family needs a house. That's all I'm saying, is that they
No,
should
but-
be allowed to have a house and a 50-year mortgage.
No, they should.
And
No.
if you can't understand that, you're kind of
All
like
right,
evil.
see, just because somebody wants a house doesn't mean the government should provide them with a house. If they can't afford a house to own, then they rent it, right? If you can't
I
afford to
agree.
buy a house, then you rent a house. And
I
a
agree.
lot of the people who are buying homes because the government is subsidizing them can't even really afford it. For a lot of people who are living paycheck to paycheck, they should not be homeowners, because when you own a home, and I know this from experience because I own many homes and I don't have mortgages on, I only have one mortgage on, I own 4 homes and I have one tiny mortgage on one of them because it's 3 1/3% and I just refuse to pay it off. But all my other homes I own free and clear. But the, what I know is that home ownership is very expensive, right? Things go wrong that you didn't know were going to go wrong. Major expenses happen. And if you're living paycheck to paycheck, the last thing you want to do is be a homeowner. You want to be a renter. So you have a fixed cost that you know what your rent is. And if something goes wrong, the landlord has to take care of it. But we've encouraged a lot of people to buy homes because we've told them that that's how you get rich. That the house is just going to
So
magically
you're saying
appreciate.
that for the majority of people who have no problem renting but pay in LA, New York, crazy rent prices, if you could give them a lower mortgage price than they pay in rent, you wouldn't do it.
No,
essentially. That's what you're saying.
No, no.
You don't
it's not-
trust
I
these
also
people
think
to make
rent-
you don't trust these people make a recurring payment which is lower than their rent amount. That's all I'm saying. Like, that's crazy. Like, people are fucking adults and they can do that. And you're kind of treating people like children.
No,
and if you give them the opportunity, I think they'll make good on their freaking
No, it's
debts.
the government
And that's what they've
that-
done for the 30-year. Why wouldn't they do
No,
that for the 50-year?
it's the government.
If you allow it.
It's the government that treats people like children by taking care of them. I say, look, yes, let adults make their own decisions about what they want to do, whether they want to buy or whether they want to rent without any government help. And let banks decide who they want to lend money to without a government guarantee. Let them evaluate the credit worthiness of the borrower, how much down payment they're putting up, what their job is, what their income stream is, what their credit history is, and let the market allocate credit. Don't have the government come in and get people to make loans that they would not make in a free market. Because now you're going to make bad loans. You're going to make loans that are likely to be defaulted. And meanwhile, when the government makes mortgage lending risk-free, now, let's say I'm a guy, I got a small business, and I want to start a business and I need some capital, and I'm going to employ people, and I'm going to do stuff that's good. And the bank is like, well, should I lend money to this guy that wants to start a business because maybe it won't work out, maybe I'll lose money, or should I lend this money to Joe Schmo who wants to overpay for a house because no matter what happens, I'm getting my money back because the government's guaranteeing it. What happens is capital that might have gone to a productive use instead goes to allow somebody to overpay for a house. That hurts the economy. That undermines our economic growth. And so we want to get government out. And,
well, you just actually made the opposite point. So listen, so by them actually doing this and having Fannie and Freddie, it stops the banks from getting entwined in silly mortgage schemes, which basically take away from them focusing on things which are actually more productive.
No, it's
really
the
and
opposite.
truly.
The
This
credit
is like
is going
such a,
into
like a
housing.
basic.
Where do you think the credit is
But
coming
this is
from?
what I'm saying. Property is such a long-term basic thing. It's gone up thousands of
What
percent
has?
over the last 50 years. Property prices.
Well, that's fake.
Because guess what? Because there's inflation.
And because
right?
of the
And this
housing
is
bubble.
where
And housing prices, look, housing prices are too high. That is the problem. They need to come down. That is the solution.
Why? If someone builds a house, why? Because if you have the ability to build a house and you build your house and then you sell it, you've made value for yourself, right? So
Well,
what you're
yeah.
saying is un-American.
Building a home,
like it
yes,
makes no sense.
building a house that didn't exist improves our housing stock. That creates value. Right.
There are 2 million properties to be built, just like sitting to be built, which need loans, right? So just so you know. 2 million
the
sites.
point that I'm making is when a house goes up in price, that doesn't add wealth to the economy, right? Just if we decide that a $300,000 house is now worth $400,000.
Yes, it does.
No, it
The
doesn't.
net asset value of the
No,
world
it
goes
doesn't
up.
add anything.
It does.
What adds it is new homes being built. Because okay, then if my house goes from 400,000 to 300,000, the wealth is gone. No, nothing is gone.
Yeah,
no. The wealth is the house, not what
yes.
the market prices it at.
No, because your net asset value as a country has literally
No.
declined. Also, yeah, because of that, also the amount of GDP from those exercises of utilities would have declined.
Only because
the whole thing shrinks.
Yeah, only because the inflated home price allows more debt to be taken on by using that as collateral. But all that does is inflate a bigger bubble. That doesn't grow the economy. That doesn't create real wealth. That's an accident waiting to happen.
That is the economy
No,
these days.
unfortunately, that's the problem. You finally said the right thing. That is the problem. We've got an artificial financial bubble economy that is destined to collapse. That's why I own gold. That's why I got this stuff. But anyway, thanks a lot. I got to move on because I got too many people that want to speak, and I can't let one guy hog it all up. All right, who's next? All right, I got. Oh wait. Oh, I have to wait. Who did unmute? Did everybody? Okay. I've added a couple of people, so you got to unmute yourselves. Hello.
Hey, Peter. I just had a question about. So, as far as if Fannie and Freddie weren't going to be brought out of conservatorship, what do you think the next steps are? Like, is it just a perpetual state of conservatorship where they have the net worth sweep in place, or do you think they end up getting put into receivership? And also,
I mean, I think they've been in conservatorship for like 16 years, right? So they're doing that for a reason, and the reason is because they really can't do anything else politically because of the short-term consequences. That's why I said that given what's being proposed, or just leaving them where they are is the lesser evil. Not that it's not a problem. Fannie and Freddie continue to create problems in conservatorship. I just think that they would create even more problems if, these other alternatives that are being bandied about were to be implemented.
So
but
effectively,
there is, I mean, what they really should do, right, is stop all future government guarantees of mortgages.
Right.
But the problem is that's going to immediately lower home prices, which is good for borrowers, right? People who want to buy a home. And people say, well, let's say mortgage rates go from 7% or where they are now, 6 or 7%. Let's say they go to 9 or 10%. I don't know. I don't know where they would be, but let's say they go up. And let's say that people have to put a 20% down payment again, right? They got to, so assuming that and let's say real estate prices drop by 30 or 40%. I don't know how much they would drop. But even though I'd have to borrow money at a higher rate, my total cost would be lower because the mortgage balance, the money that I would be borrowing a lot less money to buy the same house. So even though my mortgage interest rate was higher, my loan balance would be much lower and my monthly payments would be much lower. But the problem when you do that is now you have to deal with the consequences of the housing bubble. And what are those consequences? A lot of people who have, a $500,000 house now realize they have a $300,000 house. That's a problem for the guy who, thought he was rich and thought he was going to be able to sell that house and retire on the money. Now he may default on his mortgage if he doesn't have any equity. And now the lender may lose money because there's not enough collateral. So we're going to have to deal with that mess. We're going to have to deal with that.
Right. So
so because I don't think the politicians and the government is ready to deal with that, That's why they're just going to keep it as is until there's another crisis.
Well, do you think they're even able to deal with it if at this point people's home values are going to drop so substantially that all these politicians would end up getting primaried if it just seems like, oh, you're making my asset values go down this much? I mean, we're stuck between a rock and a hard place where we can't really unwind the conservatorships because of the home prices or the mortgage prices that would go up. But
that's why I thought from the beginning, even years ago, that even though they kept talking about cap and release, I kept saying, but they can't release them and they can't recapitalize them with government money, with private money, without releasing them. And so I said, well, it can't be done in a way that is politically feasible. But the biggest irony too is that, they want to solve the housing affordability problem, but they can't do that without exposing these other problems. So their solution is to make the problems bigger by just figuring out how we can get more credit into the housing market so that people can afford, or not really afford, but people can somehow stretch to be able to overpay for these houses. And the other problem they have too is, how do they allow, the current home price is based on the 3 and 4% mortgages that people were able to take out. The reason people were able to pay such a high price for the homes they have is because they were able to borrow at 3-4%. Today you can't borrow that low, and so that's why they're coming up with portable mortgages, assumable mortgages. But you can't do that without addressing the massive loss that you then impose on the lenders, who are now stuck in these underwater mortgages for the next 25 years. They were counting on these loans being repaid when the house sold and somebody else bought it and they got out of jail. But if those mortgages are going to be around until they mature, then how are we going to deal with those losses for the lenders and the government, the taxpayer, on all this?
Yeah, I mean, that's a good point, and I certainly don't have the answer. But, I mean, it just seems like at this point we're kind of stuck as far as what we can do as a country with regards to this. Like, I mean, the net worth sweeps can continue to bring money into Treasury, but it's not going to be anything substantial enough to bring the national debt down. And if we actually...
No, and it's not even gonna offset the future losses, right?
Right.
Eventually, housing prices are going to come down. We're going to be in a bigger recession. People that own homes are going to lose their jobs. They're not going to be able to make their payments, and everything that was swept over the last 16 years is going to be unswept.
Right.
All the profits are a down payment on future losses. Right, that is inevitable. There's only one way that this is not going to happen, right? And that would be hyperinflation. That would be if inflation was just so massive that the mortgage debt became inconsequential, relation to the price of homes. But it would be the price of everything that would go way up, right? And so people are now talking about the affordability crisis. It's not just that houses aren't affordable. Lots of things aren't affordable. And if the solution to the housing problem is hyperinflation, right, that's going to be even worse than the problem we got now.
Yeah, true. All right, thank you. Appreciate it.
All right, who's up next? Anybody else? I know I saw some hands. I got a couple of speakers that they have to unmute themselves because they had their hands up before. Here's a guy. Here's a hand. That is who did I? Now Nico. I got a couple of people that were raising their hand that I've brought up.
I can speak.
Yeah, who's that? Mike?
Yeah, it's Mike from Canada. I just wanted to talk about housing in Canada as well, and it's just not the Americans that have the problem too. Do you mind me speaking on this, Peter?
Go ahead.
Well, they since 2002, I mean, the governments up here found the popular vote in 70% of the homeowners. So what they did was they offered 30-year amortization and 40-year amortization. They went from 20% down payments to already down to 5 or even 0 down payments at some point just before the 2008 crisis. And it was great for the one party, and they managed to hold power for a long time. And then the next party got in, and they basically rode the coattails and kept the same narrative. And basically, when we had this last interest rate rise just a few years ago, a lot of homeowners that bought houses during COVID, where I think houses jumped like 40 or 50% on top because of the low interest rates, the COVID interest rates. Basically, the banks up here were allowing these distressed homeowners to increase their amortization to like 60 or 70 or 80 years. I heard this from, it wasn't published, but I heard this from a few real estate agents that the banks were allowing,
housing, look, the politicians everywhere, that's the problem with democracies, right? I mean, people who own homes, they're voters, and they want policies that will make the homes that they own worth more, so that if they sell them, they'll get more money, or so they can take out loans against them and have more money. So, yeah, you have a voter bloc that wants the homes that they own to be more expensive. Now, obviously, that is a problem for younger people who don't own homes. But the way the politicians solve that problem is they actually pretend that the policies that are designed to help homeowners are designed to help home buyers, because they say, look, we're helping you buy a home. We're making it easier for you to borrow money so that you can buy a home. And so the people that don't own homes and who see these high prices, they actually think the government is helping them when the government is hurting them. Just like the students with student loans. The students think they're being helped because they see how expensive college is, and the government is helping them borrow the money. What they don't understand is without the government help, college tuition would be cheap and they wouldn't need the government help. That's the expression. The government is great at breaking your leg and then handing you a crutch and then saying, see, without me, you couldn't work. You couldn't walk. So the government makes houses expensive to benefit homeowners, but pretends they're helping home buyers with the subsidy. Just like the government benefits colleges and universities by allowing them to charge more for their product, but then the government pretends they're helping the customers. They pretend they're helping the students by saying, oh, look, we're helping you go to college. You see, we're giving you student loans. We're giving you aid. See, the government is great. See, we're helping you afford college. What they don't understand is if the government wasn't involved, they would be able to afford college. They would be able to do it without all these loans. So, yeah, I mean, this is the problem with democracy, and the problem, and the fact that the people just don't understand. The average person just does not understand how screwed up everything is because of the government.
Well,
and they actually think the government's helping them.
I don't want to name any of your peers, but I mean, there's huge real estate portfolios that are being propped up, and you see these governments, they say, oh, we're going to get more houses built because that's going to bring down prices. That might just do 5% in geographical areas here and there, but overall, it's not going to unwind the bubble, and it's just annoying how the government is lying and saying we can just build more houses. Meanwhile, they prop up all these massive real estate portfolios of like 15,000 homes here and there. And it's like they de-risk owning massive portfolios.
The irony of like the Trump administration talking about housing affordability when they're slapping tariffs on lumber and steel coming in from Canada, which are things that we need to build those houses, or copper, so they're actually pursuing policies that make building homes more expensive. And we want to deport a lot of the workers who were helping to build the homes. So like they want to drive up construction wages. So they want to make the materials more expensive. They want to make the labor more expensive. Well, then the homes are going to be more expensive. But the new ones to build.
Peter, would you agree that the narrative that they just want to have increased production of homes to bring down prices, do you think that's not kind of bullshit?
Well, the government does not want home prices to come down. That's obvious. They don't
Yeah.
want that. Everything they're doing is to prop home prices up, right? Because home prices coming down, that exposes the problem. I mean,
Right.
the problem isn't caused by home prices coming down. It's exposed. The problem was caused by inflating home prices in the first place, right? Once they did that, once they funneled all this cheap money into housing and inflated a bubble, the fact that it would eventually burst is inevitable. But the real economy, the real U.S. economy has been suffering beneath the surface the entire time because of the misallocation of capital. And it's not just housing. It's education, it's healthcare, it's every place that the government is involved, right? The government has chosen to subsidize certain things, like education, like housing, like healthcare. And so all that stuff gets more expensive than it otherwise would be. And things that we should have invested more money in go wanting. And when the president complains, oh, why do we have these huge trade deficits? Why are we importing all this stuff that we used to make? And it's because instead of making that stuff, we're funding healthcare and education and housing. So we're doing a lot of stuff that the government is subsidizing. And so we're doing less of the stuff that the government isn't subsidizing. And so now we rely on the rest of the world to produce all the stuff that we're not making anymore. And they still don't get the connection or realize the degree to which we're now dependent on the world. Not the other way around, like Trump says, that the world is taking advantage of us and screwing us over. It's the other way. We're taking advantage of the world, and we've been screwing them over. And that's what I think is coming to an end right now with this de-dollarization that is, just getting started.
Sounds like a huge conflict of interest, when these guys are making these decisions and they already own massive portfolios and stuff like that. It sounds like they're just pumping themselves up indirectly as well.
Oh yeah, well look, obviously it's very self-serving, and probably nothing like what I've seen in the current Trump administration, where the policies, particularly related to crypto, and I don't want to get into that here.
No.
But it's the policies that are being pursued by the administration are the policies that are designed to enrich the members of the administration, and their families and their friends. I mean, that seems to be the driving force behind everything that's getting done, under the guise of, well, we're business friendly, we're pro-business, that's just a ruse, right? It's not just being pro-business means, just being neutral, just getting the government out of everything, not picking winners and losers, not designating certain industries or certain companies that you claim these are the important companies. These companies we need to subsidize. Government should take a stake in these companies. That's not being pro-business. That's actually being anti-business, because being pro-business is pro-free market competition, where the government is completely out of it and just allows market forces to allocate capital, not government bureaucrats.
Okay, and I hope you come to the VRC. I'll let you go. Take care.
All right, take care. Who's next?
Here.
Yep. Nico.
Dude, I don't know, man. Like, I'm a gold holder as well, but I don't know. You come to the space today, you set up the space, great. I think your narrative is, you're you're trying to, apparently, to me, in my view, spread so much fear about the government and about housing and how shitty everything is and how bad the Trump administration is and how everything is so horrible. And to me, it reads into maybe you're trying to click and bait some Fannie and Freddie investors into buying gold. Not going to happen. But you said one thing, and you said a lot of things here today.
I'm not even talking about gold. I'm not even talking about gold on this.
Well, I didn't say you were talking about it. I said maybe you were trying to spread so much fear that Fannie and Freddie are such shitty companies, and you're coming in here and saying, you shouldn't invest in housing, you shouldn't this, you shouldn't that, this is what's up. Man, you're a freaking genius. If you were so smart, Why aren't you like a super multi-billionaire? Anyways,
Well,
my,
I'm not exactly broke, but
well, yeah,
but
neither am I. I did hear you say you had a little low 3% mortgage on your 4 houses that you couldn't pay
on
off, so
one, I
you
have
didn't
one
want to pay
house.
it. But
I have
well,
one
you said
house.
4 earlier, and then you also said that Fannie and Freddie need to be recapped. I'm not sure what you mean by recap. You want to explain that?
No, I didn't. Well, if you wanted to recapitalize them before releasing them from conservatorship, the plan was that they would raise money in an IPO, that investors would buy stock in Fannie and Freddie, and by doing that, would
How much
infuse
money
them
do Fannie and
with
Freddie
private
have in the
capital.
bank right now? How
But-
much capital
but
do they have in the
I-
bank right now?
That's government money, right? That's
Really?
That's not money
Fannie
coming
and
from the
Freddie's
private
cash
sector.
in the bank is government money? Are you serious right now?
The government owns them. They're in conservatorship.
The government owns
and the
jack shit.
government's
The government doesn't own anything.
Yes, it does. And the government
No, it
has
doesn't.
the senior preferred. You don't understand Fannie and
Really?
Freddie. Yes, exactly.
The government owns nothing. You're telling me the government owns Fannie's 150 billion cash that's in the bank?
Yeah, they're owed. They have the senior preferred stock. They're in the
Are
capital
you saying that the
structure.
government owns
Yes, they own Fannie and
$150
Freddie right
billion
now.
dollars that Fannie and
Yes.
Freddie have? They own that.
Yes, it's
Oh,
owed to
wow.
them. They own it. They own the companies. They operate the companies.
They don't own the companies. They own jack shit.
All right. Well, you're wrong there. Anyway.
No,
I'm just
you're
gonna have
wrong.
to
No,
let
you're
you
wrong
know.
because you know what? They have warrants, Tech.
Yeah, so the prior speaker, they have warrants that they can own the common, but they don't even have to exercise them because they own the senior preferred. They're owed, I don't know, what is it, a couple $100 billion, or I forget the exact amount, but they're at the top of the capital structure, and they can completely control the company. The common stock is really worthless. I mean, the fact that people were buying the common stock, despite the fact that it's worthless, is because they're speculating that the government's going to do something to change that. But if Fannie and Freddie stay where they are right now, the common stock is completely worthless. It has no value, right? It only has the optionality value that maybe the government will make the mistake of trying to resurrect these companies and put them back into private ownership in some way that creates value to the common shareholders, which would all come at the expense of the U.S. government, taxpayer, the U.S. economy. But that's the bet. But right now they're worth nothing. And as far as what I think of Freddie and Fannie, look, they've been run by the government for the past 16 years. I can't imagine that they're efficient businesses. I mean, what does the government run efficiently? Think about the post office. I can't imagine. And I don't think companies should exist where their primary reason for existence is because they're the beneficiary of a government subsidy. I think that a business needs to exist on its own. And when someone says, well, but what about banks? Banks all have government guarantees. Yeah, we had a banking system in America before we made the mistake during the New Deal of creating the FDIC. That was a mistake. We don't need government guaranteed bank accounts to have a banking system. And in fact, the banking system in America was sounder prior to the Great Depression than it is now. Now, yes, there was losses during the Depression from bank failures, but the losses were very small compared to what they would be now. I mean, the losses, I think they've estimated that it was a couple of percent. I mean, I forget the exact number, maybe like a third of the banks failed, so 2/3 of them didn't fail at all. So for 2/3 of the banks, nobody lost anything. And then in the banks that did fail, I mean, most of them didn't fail completely where you lost everything. I mean, there were probably some that did, but maybe some people lost 10 cents on the dollar, 20 cents, they got back 80, 90 cents. So, the losses were not that bad. And of course, during the 1930s, the price structure went down a lot. Consumer prices dropped by about 30%. So net bank deposits gained value during the Depression. Because even if you ended up losing, let's say you had your money at several banks and you ended up losing 20% of your money, right, in failed banks. But if prices went down by 30%, you were 10% better off. Your money that you had left had more purchasing power than you started with. But today, inflation is wiping out every year. Every year, Americans lose more to their savings through inflation than they lost during the failures during the Great Depression. But we would have a much sounder banking system today if it was based on capitalism and not socialism, right? People today, when they put their money in a bank, nobody cares what that bank does with the money. No one gives a shit, right? Nobody shops around for a bank the way they shop around for a car, right? People before they buy a car, they do some research. They look at what the warranties are. They go to Consumer Reports, or they look for reviews. Is the car safe? Is it reliable? What's the resale? Right? People shop around. Nobody shops around for a bank. I mean, maybe it used to be, well, it's the closest bank to my house, but now you never even really have to go down to the bank, right? You don't have to go stand in line anymore and get your money out of your bank. So no one really gives a shit, about where they put their money. They just put it in any old bank because they're all the same, because the government guarantees all the deposits. Now, if the governments didn't guarantee the deposits, that'd be a different story. Now, before you put your money in a bank, you would do a little research, or you would rely on third parties that say, hey, these are the good banks. They don't make risky loans. They're well capitalized. You can count on this bank. It's safe. In order to get those good reviews by third parties who, put their good housekeeping seal of approval on a bank, the banks would have to have sound balance sheets and make good loans and not take a lot of crazy risks, because they would want their bank to be able to attract customers who were placing a value on safety. But today, nobody puts any value on safety, because safety is taken for granted. Every bank is just as safe as any other bank. So there is no free market incentive for a bank to be safe, because it doesn't gain anything from safety. Not because the public doesn't care. This is all because of the government. And to say, well, we'd have no banking system if the banks had to behave and they had to be more responsible, that's bullshit. Of course we would, because we had a banking system before FDIC, and there are other countries that don't have government guaranteed bank accounts. Most of them do, but not 100%. And the ones that don't still have a banking system. And the banking system is much more sound inherently. I mean, the only reason our system doesn't collapse right now is because of the government guarantees. If the government came out today and said, the FDIC, there's no more government insured banks, they'd all fail. All the biggest banks would fail without government support. What does that tell you? They now need that support. They now completely depend on that support because it's no longer viable. The banking system didn't need government support before the government support was introduced. Now it depends on it, right? The same thing is happening with, the house prices and the housing market, right? The government screwed it up, and now they can't figure out a way to get out of the situation that they created. Who's next? I got a couple of people that Alien and Reagan, you're up and you guys are muted if you want to talk. If there's anybody else, you could raise your hand. Otherwise, I can conclude the space if nobody has any more questions or statements. I see one guy I just put up there. Drucifer? Or...
Hey, good morning.
Morning.
Can you hear me?
Yep.
Hey. All right, great. I would say you're right. Everything you're saying is correct, right? But I would take the counter argument there only because they can't allow anything to fail. Because during the 2008 financial crisis, I don't know if you remember, but there was like some large cities that went bankrupt because due to failing tax receipts. So these cities are just as bad. They rely on all this tax money flowing in, right? The higher the appraisal, the more money they make. And I would also argue that not just the 50-year mortgage, but they could do, and I don't agree with any of this, by the way, but they can always do Operation Twist, right, on the bond market, and kind of rotate that stuff down onto the lower end. Now that's inherently inflationary, I guess. But then you also have the Genius Act, right, where every dollar printed is a digital dollar printed as well. So so now they have these like Tether and Coin. A lot of these companies now they're gonna be buying more treasuries on the lower end, right, on the shorter end. So it's like you can't, like, if they let housing prices readjust and to what their actual value is which is much lower than now, then you would see places like New York City go bankrupt. Like there's just no, like, it would reveal, like, our credit would be downgraded like pretty quickly, right? So like I don't see how, like, it's great to say that this would happen, that would happen, and I understand that we need to take the pain at some point, but I just don't see how we're ever going to take the pain, because if we take the pain, it's going to be colossal, right? Like everyone's just going to get wiped out. Like, what would you say to that?
I mean, look,
and also Operation Twist can probably kick the can down the road maybe another 5 years. I mean, who knows, right? With these, anyways, get your thoughts.
Yeah, well, that is the problem I stated from the very beginning, right? That there's no way to deal with this without having to face the music, and nobody wants to face it, right? Nobody wants to allow it to happen on their watch.
Yeah, but the music is so great that you're at a point where you would get a bond, like our bond re-rating would be just straight junk afterwards, right? You know what I mean? Like it doesn't, like once you start seeing cities like I know, like during 2008, there's a large city in California called Stockton. I know it's kind of,
I remember,
whatever. And it went bankrupt, right? And all these muni bonds, I mean, muni bonds are worth shit anyways, right? But they really got to, they really went down at that point. But that would force these credit agencies to do an instant re-rating, almost, right? Like if you have all these so even if we did that, like there's just really no right answer in any of this, because the instant re-rating that would happen is the dollar would get destroyed anyways, and if we keep inflating this, it's going to get destroyed. So I don't know that there's any good way out.
No, there is no good way out. I mean, there's just a less bad way out, right? And the less bad way out is to bite the bullet and, swallow the medicine. That's it, right? Because kicking the can down the road because we don't want to swallow the medicine because it tastes really bad doesn't solve the problem. It just makes the problem worse, because eventually we're going to get confronted with something much worse than what we refuse to deal with. And we're getting very close to that outcome happening.
With Fannie Mae and possibly coming out of conservatorship, and like with the banks, what they did was the bond holdings that they had, they did the BTFP, right, where they paid 100 cents on the dollar for them. Is there any way that they could possibly hide that off balance sheet with the government, you think, like, and then be able to bring Fannie Mae, given an actual IPO? I mean, because this is a complete banana republic at this point, so anything's possible, I think. But do you think that?
No, I mean, look, my personal thought is they're gonna try to keep hope alive, that something's gonna happen with Fannie, just so they can keep the stock price going up, so that some people can cash out. I mean, I think that's the main goal right now, is to keep speculation going that these shares are going to eventually get uplisted, eventually have an IPO, eventually be these huge profit-making, dividend-paying companies, and that investors should buy the stock now, right? Because the stock market is it discounts the future into the present. And so if investors believe that in a few years, Fannie and Freddie are going to be $40 stocks, right? Then they're going to buy them now, right? I mean, why wait, right? I mean, if they're going to go up that much, right, buy them now and get rich, right? So I think that's what it's all about. I think at the end of the day, my guess is that absolutely nothing happens to them. But is it possible that they can get the government to forgive the senior preferred? Maybe. Can they get, I mean, that could happen because they just forgive it. I think that would be wrong, but I think they could do that to try to create the illusion that they're more valuable. Can they get the U.S. government to exercise its penny warrants? Yeah. I think actually getting an uplisting is more challenging to actually get these things onto the New York Stock Exchange while they're still in conservatorship. It seems to me that should not be able to happen, right? That the listing standards would not allow that to happen. But I mean, I suppose there's a tiny chance that could happen. But I think the smallest chance of all is that they ever actually get released and they actually become, private companies again. Because I don't think that could be done without answering the question that I posed at the very beginning of the space, which was the government has to state for sure whether or not there's a guarantee or not. It can't just be, we can't go back to where we were. That's impossible, right? You can't put those worms back in the can. Because like what Donald Trump said when he first started talking about releasing Fannie and Freddie, he made it clear. He said that they're going to come back and they're going to be private again, but they're still going to have their implicit guarantee. That is impossible. You cannot say that they have an implicit guarantee, because the minute you say that, it no longer is implicit. It ceases to be implicit the minute you acknowledge that it exists. You can't, the reason it was implicit before is because the government denied it existed. And so they can't say, Trump can't say or go do an IPO and say, look, there is no guarantee. We don't guarantee. Look, I'm winking my eye. You see, it's a wink. I really don't mean what I'm saying. Even though I'm saying we don't guarantee it, we do. You can't do that. I mean, you can't be that dishonest when you're selling securities. You can't, so you actually create something that people are relying on. So we can't go back. It's like you can't get your virginity back. We can't get Fannie and Freddie back the way they were, even though the way they were was bad. But the way they wanted to
Yeah,
be,
but aren't they
worked.
doing that with banks? Aren't they doing that with banks now with the bonds that they buy? I mean, isn't that like the same thing?
The banking situation was made worse. The moral hazard was made worse after the financial crisis because Fannie and Freddie bailed out everybody. I mean, FDIC bailed out everybody, and the government still. There are deposit limits, right? They raise the limits, but the government doesn't insure an unlimited amount of money. But so far, every time a bank has failed, the government has made whole every single depositor. Even if the depositor had way more than the FDIC limits, they still covered them. Now, legally, they weren't required to, but they do it because they don't want anybody to question their confidence in our banking system, even though our banking system is extremely fragile because the whole thing is insolvent. Look, all of the too big to fail banks that we should have let fail and that we bailed out are now in worse shape than they were. They are now bigger than they were, and when they fail, the losses will be bigger. And but that's why they can't let them fail. But again,
but don't they guarantee them on both ends though? They do it through the FDIC and they also do it through whatever bonds they hold, right? Because they got wiped
and
out.
ultimately, look, this is what the government has done. The government has guaranteed that nobody loses any money. And so what that means is that everybody loses everything. Because the way this is heading is massive inflation, maybe hyperinflation. And so nobody loses their dollars, right? So the government is making it so you have your money in the bank. You don't have to worry about losing your money. If you have $1 million in the bank, don't worry. You will always be able to withdraw your $1 million. That is the deal. That is the commitment. You put $1 million in a bank, you will always be able to get $1 million out. But what you're not told is what that money will buy when you take it out. So because of what the government is doing, maybe you take your $1 million out of the bank and you can buy a pack of chewing gum with it. But, that doesn't really do you a lot of good, even if you like gum. Because if all you got is a pack of gum from your $1 million, you might as well have lost it all. See, what I would rather have happen is the bank fails, and of your $1 million, you get back maybe 700,000. Okay, I can buy 700,000 packs of gum, assuming they cost $1 a pack, right? I'd rather get less of my money back, but keep more of my purchasing power than just get all my money back that doesn't buy very much. But that is where all of this is headed, right? And that is why, I keep telling people, don't put your money in the bank, because you are guaranteed to lose. Because the government has guaranteed your bank account, they've also guaranteed that you can't win, right? Because either the bank fails or your money fails. That's the dynamic they've established. So you're going to lose, right? Either the government pulls the guarantee, your bank fails and you lose your money, or the government honors the guarantee and your money doesn't buy very much. That's why you don't want to keep any long-term savings in a bank. Unfortunately, you want to keep it in gold. And somebody pointed out earlier that it's not good for the country when people own gold and just bury it in their backyard. And I agree. I would much rather have people put money into a sound banking system where it could be loaned out. But unfortunately, we don't have a sound banking system. That's not my fault. And if you put your money in a bank, it's going to lose to inflation. So the government has created a situation that forces people to bury their savings in their backyard rather than making it available to the economy. That is an unfortunate consequence of bad monetary and fiscal policy. And I will throw in one quick commercial then on this Spaces, that if you don't have any gold and silver, you should take your savings out of a bank and buy some gold and silver and keep your purchasing power secure yourself, because the government and the banks have sacrificed that. So you can go to Schiff Gold and you can buy some physical gold and silver and we'll ship it out to you. And if you don't want to store it and you want to just keep it so maybe we could use it as a medium of exchange, you can go to tgold.com, just T for tokenized gold, which ultimately is my goal here, but go to tgold.com, which is part of Schiff Gold, and you can open up a custodial account and buy whatever quantity of gold and silver you want and have it stored for you in a way that will be very accessible to use your gold and silver in commerce. But that's unfortunate that the banking system has been so screwed up by the government that this is how we have to save. It's not ideal for the country, but it's ideal for the individual who's doing it.
If Fannie Mae bought bonds, though, then wouldn't that be kind of an implicit bailout?
Yeah, now look, Fannie and Freddie, I mentioned at the beginning of the space, Fannie and Freddie were the biggest buyer of subprime mortgages. Even though they didn't guarantee those mortgages, they helped create the market by buying them. And they helped fuel credit into the subprime. So they were at the forefront of the housing bubble. And so it's like, why would we want to resurrect the very creatures that helped destroy the economy, right? I mean, obviously they had help from the Fed, but we should kill them. We shouldn't bring them back to life. And that's the other thing that I don't like about reviving them, is it makes getting rid of them that much harder. While they're in conservatorship, that's where we have a plan to wind them down, right? And maybe we can find an orderly way to gradually wind them down. But anything that goes further away from a wind down is a step in the wrong direction. So conservatorship, if it's a placeholder for eventually unwinding them, then okay, we made a little progress. But if we just go back to the way they were, in which case it's worse than the way they were, because there's no way to bring them back without the explicit guarantee rather than an implicit one, we not only did we learn nothing from the mistakes of the financial crisis, but we created a situation that is arguably much worse, and that will lead to an even bigger crisis in the future than the one that we experienced in the past, and that resulted in them going into conservatorship in the first place. Anyway, let me bring this thing to a halt, because now it's about noon here in Puerto Rico, so I've been doing this for 2 hours, and I think that's enough time for me to say my piece on this topic, and to have a space up there that can now live on X, that can, I guess, be in contrast to whatever happened on the Ackman space. People could decide. People could listen to both perspectives and decide who they think makes more sense from an economic perspective. What is the right thing to do for the country? What's the right thing to do for the housing market? And of course, when I talk about the right thing, it's the right thing in the long run, not the thing that allows us to continue kicking the can down the road, because that's never the right thing to do. It's the right thing to do if you're motivated by politics and a desire to get out of Dodge and let somebody else deal with the consequences of your mistakes. But when it comes to economics, when it comes for people advocating for policy, some pain now is better than more pain later. And especially, it's like there's the first rule of holes, and this is a basic thing that nobody seems to know in government, but the first rule of holes is that when you're in one, you stop digging. And what the government wants to do with the housing problem is dig the hole deeper. And the deeper the hole is, the harder it is to get out. What I want to do is stop digging. Yes, we're in a big hole. I get that. I'm not the reason we're in this hole. The government dug the hole. But the sooner we stop making the hole bigger, the sooner we can start getting out of it. That much closer we are to, resolution and solution. Making the hole bigger and then getting out of a deeper hole is worse, right? You don't want to be in the Grand Canyon of holes, right? And unfortunately, we may even already be there. But anyway, on that note, let me sign off.